The Medicare bubble has burst. What does this mean if you are on Medicare or a family member of yours is on Medicare? We're going to be diving into an amazing article the Wall Street Journal just did about how investors are kind of freaking out about the Medicare market and what this could mean for you, especially going into 2025. So let's dive into it. So the article is "The Medicare bubble has burst." As you can see here, government health insurance program has been a goldmine for private insurers until recently. So the Wall Street Journal has been doing amazing coverage on all the Medicare news and everything like that. Highly recommend if you are interested in this sort of thing. So for years, the privately run Medicare Advantage business generated outsized profit growth for health insurance giants, with hundreds of billions of taxpayer dollars flowing to insurers in a fast-growing market buoyed by aging baby boomers. There was little not to like as far as Wall Street was concerned. Companies like United Health Group and Humana bet big on the program, and investors generally rewarded them for it. Medicare Advantage, in which the government pays insurers a set amount to manage the care of seniors, recently surpassed traditional Medicare's share of beneficiaries. It was 30% a decade ago. So a couple things to cover here. Medicare Advantage is now over 51% of the market. It's about 51% as of the time of recording this, depending on who you talk to. And that's a big deal because Medicare Advantage is a little bit controversial. The jury is out on which one is better. A lot of people like it because it has a $0 premium in many cases, but other people don't like it because there have been a lot of articles going over how care has been denied, how potentially the insurance companies are gaming the system in order to make more money. So it's been an interesting experiment, if you will, to talk about Medicare Advantage. And the biggest thing is that the government pays, in many cases, a set amount for healthcare. So if you're in a Medicare Advantage plan, let's just say the number is $11,000 is what the U.S. government gives an insurance company to take care of your health care. But the gold rush is over for investors, at least for now. After years of reports, lawsuits, and whistleblower accounts accusing big insurers of gaming the system and overcharging the government, the Biden administration has made a series of policy changes that have negatively affected what the plans get paid. Meanwhile, a post-COVID surge in seniors' medical costs caught insurance by surprise. So, again, a lot of things to go over in here. One of the biggest things is that there has been this belief due to whistleblower accounts that insurance companies have been using AI and automation and technology to mass deny claims in Medicare Advantage plans. This has been hugely controversial. The idea is that they're just denying tens of thousands of claims a day with an AI that is controlled by a doctor. The other thing is there's this idea of upcharging, where insurance companies and private practices and healthcare systems will lie about the severity of people's health conditions to get more money. Let's say you have anxiety, you might get hit with a depression diagnosis because depression gets more money. That's just a small thing, but the idea is that these insurance companies have been doing this en masse in order to get more money. As you can see here, Medicare Advantage is now 51% of the market as of 2023. The stark drop in profitability is rattling corporate boards and investors. One of the biggest losers is CVS Health, whose Aetna unit bet big on Medicare right before costs soared. To gain market share, CVS Aetna offered generous plans this year, surprising some executives at rival insurers. While the move paid off in terms of membership count, CVS added more than 700,000 Medicare Advantage members this year. The company underestimated what it would cost to insure them. In its first quarter earnings report earlier this month, CVS said the segment helped drive medical costs $900 million higher than the company had expected. Its shares had their largest one-day drop in almost 15 years in response and are down 26% for the year, giving it a market capitalization of just over $70 billion. That is roughly what it paid for Aetna back in 2018. So what has happened is, believe it or not, medical costs were lower during COVID because people didn't want to go to doctors, didn't want to go to hospitals. So in a lot of cases, people stayed home. People are now going to get the care they want again now that COVID is more or less over. And we're talking about these insurance companies not anticipating. They thought that the healthcare costs were going to stay lower. And this is having real world effects. One example we can bring is locally. There is a hospital system called Hackensack Meridian here in New Jersey, very large hospital conglomerate. A lot of doctors and specialists are in it. And they are currently fighting with Aetna because Aetna wants to pull back their reimbursement rates and pay Hackensack less. And it might lead to people in Aetna Medicare Advantage plans not being able to go to Hackensack. So this is big on a national and local level. It could affect a lot of people. CVS isn't the only one in trouble. Medicare-focused insurers, some of which had vastly outperformed the stock market in the past several years, are underperforming this year. Humana shares are down more than 20% this year, and even industry leader United Health, which was more conservative in how it priced its plans, was down as much as 16% for the year in April before recouping much of the losses. That by no means signals insurers are about to flee Medicare Advantage, though Cigna did agree to sell its business earlier this year. Annual spending on the program, which is now hardwired into America's healthcare system, is projected to approach $1 trillion by the start of the next decade. And while declining profit expectations have negatively affected share performances, there are still plenty of profits to be made. You can see a cool graph here where you can see, they're just going down. They took a huge hit, but it does appear that it's kind of normalizing now that we're in May. Obviously, quarterly earnings reports hit, but United Health Group, that is a big loss. But let's take a quick look at what their stock prices are. All right, so Humana is at $350 a share. United Healthcare is at $500 a share. And CVS is at $55. So it's interesting. I'm not going to signal out anybody in particular, but in general, they seem to be doing pretty well. I know they're taking hits, but their stock is so high. It's kind of crazy to me. Take hard hit Humana, which is mostly focused on Medicare Advantage. The firm is expected to earn significantly less in 2024, but analysts polled by FactSet still see it making over $16 per share this year. By 2026, analysts expect earnings to rise back to $26 per share, some $3 billion in net incomes. The high cost of covering seniors is likely a temporary problem for insurers who get to submit their bids to the Center for Medicaid and Medicaid Services every year, CMS. While they are limited in the changes they can make, CVS and others said they are planning to exit some counties and cut back on things such as vision benefits to boost margins. We had done a video about this, but we'll talk about it a little bit here. The goal for next year is margin over membership. CVS Chief Financial Officer Thomas Cowhay said at a recent conference. Could we lose up to 10% of our existing Medicare members next year? That's entirely possible. By all indications, other large players such as Humana will also be shifting from growth to profits. That could create an opportunity for leader United Healthcare, which has relatively better profit margins, to grab more market share, argues Scott Fidel, an analyst at Stephens. So this is interesting. With the Medicare Advantage stuff, they have seen crazy growth over the past decade, and it seems like they're willing to stop giving the extra perks that lured people into them. When we talk to clients, they're like, what about vision? What about dental? What about gym memberships? We always want to start with, what's your health care? That's the most important thing to us, and we can then make a decision about this. But so many people take these plans for these extra perks, and now that they're in them, those perks may go away in order for them to make more money. So, all these things like dental, vision, over-the-counter cards, gym memberships, they could be on the chopping block. We have talked about this in depth. I can give you a little insider scoop. We went to this big Medicare conference in Las Vegas this year, and we saw one of the top dental companies speak. And they were very interesting speakers. And one of the things this person said was, we expect Medicare Advantage to cut dental benefits over the next couple of years, so we're going to want you to start selling our product as a stopgap. So if you think about that for 1 second, people take these Medicare Advantage plans because they're $0 and you get all these benefits, but you might need to start paying for those extra benefits through separate companies going forward. So it's an interesting situation. Obviously, we're monitoring it, but if you've been paying attention to the channel, paying attention to what we've been saying, things could be changing pretty quickly. So Medicare profits have helped drive the industry's outperformance. So look at this real quick. This is the S&P 500. Look at this for 1 second. So you got United Health Group, you have Centene, Humana, Cigna. They are all outperforming the market, in some cases by a ton, which is why you can see they have such high stock prices and everything like that. The tougher challenge is on the regulatory side. The Biden administration's changes, from releasing stingier payment rates to changes in how programs can code patient risk, signal an era of tighter purse strings. With such a big part of their business at stake, the industry's effort to sway public and policymakers' opinion is expected to go into overdrive. I can assure you that the companies will be investing pretty heavily through campaign donations and lobbying to try to figure out what they can do from a public policy point of view, said Wendell Potter, a former top communications employee at Cigna Group, who is now a critic of the industry. We've seen this anecdotally with some commercials funded by these companies, not directly, but it's really just videos of seniors hanging out at a bowling alley, and they're like, can you believe they're about to cut benefits like dental and vision? I love my Medicare Advantage plan. And really, it's these companies trying to sway public opinion. Let's all be clear here. The government is not cutting dental and vision and over-the-counter cards with Medicare Advantage plans. These private companies are, in response to the government looking for a little more transparency into what they're actually paying for. For decades, policymakers have sought to bring private insurers along as a way to manage soaring Medicare costs. In 2003, Congress passed the Medicare Modernization Act, which created Medicare Advantage as we know it. The idea, in a nutshell, is to bring down costs and improve care by allowing insurers to manage care, much like they do for the nation's employers. But critics point to studies showing that Medicare Advantage plans to cost the government and taxpayers billions of dollars more than traditional Medicare. For well over a decade, Medicare Advantage plans have been making extremely high profits. What's going on now are long overdue policy changes to bring their pricing and coding practices back into line, said Dr. Don Berwick, former head of the Centers for Medicare and Medicaid Services, otherwise known as CMS. In the near term, the best hope for a quick shift to insurers' fortunes could be a Donald Trump win in the coming presidential elections, Fidel said. Republican administrations, which tend to favor privatization of government services, have been more favorable towards Medicare Advantage. In either case, it isn't going away. The business remains highly profitable, but the bonanza investors and health conglomerates got accustomed to in recent years has diminished for the foreseeable future. So this is going to be a very interesting thing to keep tabs on. I would say this is an election year. There's going to be a lot of people talking about this stuff, a lot of doom and gloom. We're here to give you the facts. We're here to set things straight. If you have any questions about Medicare for 2025, reach out to us. We'd be happy to help you out. And be sure to stay on top of the channel. We are going to be staying on top of this news for you to make sure that everything is good and that you are protected. But what are your thoughts on this? Do you think Medicare Advantage should be expanded, contracted? Do you think it's right to, be more transparent with what we're paying for and everything like that? Let us know in the comments below. And if you have any questions or any other news you want us to focus on, be sure to leave us a comment below as well, and we will do it. So once again, this has been your Medicare guy, Ken, and I will see you in the next video.